Good day, and welcome to your daily global economy update. Here are the top economic and market stories making headlines around the world. The Bank of England has cut interest rates to 4%, down from 4.25%, in a split 5-4 decision by its Monetary Policy Committee. This marks the fifth rate reduction in 12 months and reflects growing concern over elevated inflation, which the bank now forecasts may peak at 4% in September, double its 2% target. Back-to-back rounds of voting were needed due to deep disagreement among officials. The pound rose about 0.4% against the dollar, while UK bond yields and stock indices reacted to the move. This change signals relief for borrowers through cheaper loans, though savers may see lower returns, and markets are now questioning how far future cuts may go. Turning to commodities, gold prices edged higher, with spot gold rising to $3,308 per ounce, and futures climbing to $3,445.60. The surge stems from renewed investor demand for safe havens amid escalated trade tensions arising from the U.S. imposing tariffs on several countries. Elevated gold prices suggest growing caution across financial markets. In sharp contrast, oil prices fell today, marking their sixth consecutive decline. Brent crude dropped by 46 cents, 0.7%, to 66.43 per barrel, while U.S. West Texas Intermediate slipped 47 cents, 0.7%, to $63.88 per barrel, as markets responded to the announcement of a potential Trump-Putin meeting and increased OPEC Plus production. These developments sparked hopes of a diplomatic resolution in Ukraine and increased global supply, which is the reason for falling oil prices. On the corporate front, Japan's automotive giant, Toyota issues stark warning. Amid U.S. tariffs, Toyota has slashed its full-year operating profit forecast due to sweeping new U.S. tariffs. The company now anticipates a $9.5 billion hit to earnings and has trimmed its forecast by 16% to an expected $21.7 billion for the fiscal year ending March 2026. In the first quarter, Toyota reported an operating profit of $7.9 billion, down from $8.9 billion a year earlier. Most strikingly, Toyota's North American division recorded an operating loss of $431 million, mainly due to $3.1 billion in tariffs. These financial hits reflect a broader industry problem. The global auto sector has absorbed nearly $12 billion in losses from tariffs, with Toyota bearing the largest burden. What does this mean for consumers and economies? Car prices in the U.S. are likely to increase, making vehicles about 4 to 8% more expensive, which could push average prices above $50,000. To offset these rises, some automakers like Toyota may consider shifting production to U.S. plants, leveraging a local-for-local strategy to reduce tariff exposure. Here are other key stories making headlines today. Trump's new tariffs took effect, hitting over 60 countries with duties up to 50% on key exporters, raising concerns about global trade disruption. Asian markets gained, led by tech strength and easing Fed expectations. Japan's Topix and Nikkei climbed 0.9%, while Taiwan surged 2.3%. The dollar softened. That's all for today's Global Economic Roundup. For your daily dose of global economic and finance news, please subscribe, like, share, and comment. See you tomorrow.